The national portion of the real estate exam requires you to clearly distinguish between a buyer assuming a mortgage and taking title subject to an existing mortgage, because the legal liabilities for your clients are worlds apart. In a mortgage assumption, the buyer is formally stepping into the shoes of the original borrower. This is not a casual agreement between parties, but a structured legal process that requires the lender's express permission. The buyer must sign the existing promissory note or a specific assumption agreement, which creates a direct legal obligation between the buyer and the lender. Because the buyer has signed the note, they become personally liable for the debt. If the property eventually goes into foreclosure and the auction price is not high enough to satisfy the remaining balance, the lender has the right to pursue the buyer for a deficiency judgment. This means the buyer's personal assets and other income could be seized to pay off the remaining debt. In many cases, the original seller remains secondarily liable unless a novation occurs. Novation is a critical exam term to remember, because it represents the only way a seller is truly off the hook. It is the legal act of replacing an old contract with a new one, or replacing one party with another, effectively releasing the seller from all future obligations to the lender. On the other hand, taking title subject to an existing mortgage is a scenario where the buyer acquires the property but never signs the promissory note. The existing mortgage stays in the seller's name, and the seller remains the party personally liable to the lender. The buyer acknowledges the debt exists and agrees to make the monthly payments to protect their interest in the property, but they have no legal contract with the lender. If the buyer stops paying, the lender will still foreclose because the mortgage is a lien against the land itself, but the lender cannot sue the buyer for any leftover debt. The lender's only recourse for a deficiency would be against the original seller who signed the original note. For the exam, you must remember that in a subject-to transaction, the buyer's risk is limited to the equity they have in the home, while the seller's credit remains on the line. The existence of an alienation clause, often called a due-on-sale clause, is the primary reason these transactions are rare in modern conventional lending. This clause gives the lender the right to demand immediate and full payment of the loan if the property is sold or transferred. Most conventional mortgages today include this language, which effectively blocks a buyer from assuming the loan or taking it subject to without the lender's intervention. However, government-backed loans like FHA and VA loans are often exception points you might see on the test. These loans are generally considered assumable, provided the new buyer can meet the creditworthiness standards of the agency. To keep these straight during your exam, use the mnemonic phrase that you assume the liability but stay subject to the lien. When a buyer assumes, they take the legal burden of the debt. When a buyer takes title subject to, they are simply moving in under the shadow of the existing lien without taking the legal burden of the note. Watch out for trick questions that describe a foreclosure and ask who the lender can sue for a deficiency. If the facts state the buyer assumed the loan, the buyer is the target. If the facts state the buyer took the property subject to the loan, the seller is the target. Mastering this distinction ensures you won't be tripped up by the nuanced language used in the finance portion of the National Real Estate Exam. One final detail to monitor on the exam is the role of the lender's consent. Assumption almost always involves the lender vetting the new buyer to ensure they are a good credit risk, similar to a standard loan application. In contrast, subject-to transfers often happen between a seller and buyer without the lender being notified, which is exactly what triggers the risk of the alienation clause being enforced. If you see a question asking which method provides the most protection for a seller, the answer is always assumption with a novation, as that is the only path that completely severs the seller's liability to the original lender.